Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
11,395 on the Nifty, 11,387, 11,384. 51 point down, 54 point down.
Economic momentum is very strong both in the US and in India.
We are resilient, especially if you compare us to what's happening globally.
Market has faltered a bit. We're down about 35 odd points on the Nifty. It looked at one point that after recovery from the day's low, things actually would keep going higher, but that's not panned out.
The bulls should still be reasonably okay with today's trade. Look, if you take into account the fact that Kotak was news-driven and was down 4% today, Surabhi, that essentially is accounted for 70 or 80% of Bank Nifty's fall. Pharma once again had a good day. Dr. Reddy's was up 3.5%. It was one of Victor's stocks to watch this morning actually. Sun Pharma was up about 3%.
The market slips in late trade to end the day in the red. The Sensex loses nearly 200 points. The Nifty ends below 11,400. Midcaps outperform in trade today.
The rupee continues to slide against the dollar, hitting fresh record lows. A weaker rupee sparks a rally across tech and pharma stocks.
The Nifty Metal Index is the worst performing sector. The index slips over 2% under pressure from a stronger dollar. Rising trade fears also weigh.
Kotak Mahindra Bank slips 3% after RBI dismisses the bank's plan to dilute promoter stake through a preferential issue.
ICICI Bank approaches the Reserve Bank of India to prevent debt-laden Jayaprakash Associates from being sent to the NCLT, and it sought permission for an out-of-court settlement with the company. Those were the top 5 headlines from Dalal Street. Those were the stories which kind of defined the day. Hello and welcome to a fresh new edition of Markets Today Talk Back. This is the show where we tell you all that went down in those 6 hours of trading. Through just 5 stories, we take your questions. Our experts, of course, answer them. I'm Prashant Nair. With me is my colleague, Surabhi Upadhyay. Hi, Surabhi.
Hi, Prashant. Good evening. Well, over the next 30 minutes, we will be answering a lot of your queries. Also talk about the 5 key market stories of the day. Our guests will then join in to answer your stock-specific questions. And joining in to do that today are Angel Broking's Mayuresh Joshi, as well as technical expert Mitesh Thakkar. Good evening, gentlemen. Thank you for joining in. Before we get started, let's quickly recap what we saw in the day gone by. So pretty much a market which was held within a trading band, largely speaking a 0.5% decline on the benchmark indices and an interesting recovery in the mid-cap index and specific mid-cap stocks. That's what we had going. Prashant, your thoughts on what we saw?
No, so Surabhi, this was largely global. So let me just, we'll talk about specific stocks, etc., what happened. But this began with the turmoil we saw in currencies. And, you know, it's actually quite mixed out there. It's a little confusing, directionless, if you look at it. And this is why. The dollar started the day on the back foot. It continues yesterday's slide into today's open. I mean, I'm talking about the dollar index, dollar against Asian currencies, etc., everything. Then you had news early on in the Asian session with respect to China, and this sparked another risk on with regards to Asian currencies against the dollar. So what we heard was that the Chinese Vice Commerce Minister will visit the US at the end of the month with regards to trade talks. This is the first news of this sort which is coming through after talks between both countries broke down in the month of June. So this was significant. The CNY rallied, other Asian forex picked up as well, and things looked good for a while. I mean, actually, even it briefly also showed up in equities just for a little while. But I mean, if you look at the rupee, that kind of bucked the trend. Actually, the rupee and the Indonesian rupiah, those are the 2 currencies which actually are probably going to end the day lower. You know, the pressure showed. It maybe is a function of the rupee being strong while the rest of the pack was under pressure, you know, the previous week or the week before that. But whatever it was, while the rest of the forex, the Asian forex pack ends higher, the rupee is actually weak today. You look at equities were also negative. I mean, actually across the board, I think maybe there is one market across Asian markets which ended higher. India was not one of them. India was down 0.5%. The Bank Nifty was down 0.75%. Mid-cap index was, you know, better. Small-cap index was down 0.75%. We'll get to stocks in just a bit. So there was pressure, and this was pressure which came through post-mid-session. The other big talking point has been the Turkish sort of story. This continues to loom, but the fact is that the lira now is firmly back below the 6-odd level. It had gone to 7. I'm talking about the dollar lira. So there is some amount of, I mean, actually there's a fair bit of rally which has already taken place in the lira. So that is now, in a way, sort of, it's not the predominant story. It is still a story which could roil markets once again. But for now, it is on the back burner. And then there is oil, which I think in all of this is the one positive sort of thing for India. Oil, WTI oil is still about 65. Essentially, it was weak overnight. And the good news is that it's not reversed today. It's not rallied today. So, I mean, if oil stays here, maybe weakens a little bit, it kind of negates some of the other stuff, which is mostly but all global. But in terms of stocks, Rupee, what would we say?
Well, in terms of stocks, interesting set of movers and shakers on the index. So let's get started. You had some weakness in financials. There's no taking away from that. And some of the big names like HDFC contributed to a lot of the declines that we saw today. Kotak Mahindra Bank was, of course, suffering from the news developments that took place just before we went into the Independence Day holiday. There was a lot of pressure on metal stocks across the board, Nifty metal stocks and even beyond. Tata Steel, Hindalco, Vedanta, JSW Steel, beyond the index, stocks like Nalco. Most of them were down and out, and some other heavyweights which were acting on the downside today. So those would be something like Reliance, L&T, and of course State Bank of India, part of the financial weakness that we spoke of earlier. What was up? Pharma continues to get lots of buying traction in this market, as does IT. They're also rupee plays. So today, once again, it was a good day for Dr. Reddy's, Sun Pharma after good numbers, and GAIL has seen a lot of upgrades after the numbers, and the buying continued on that stock as well. Infosys was positive, as I mentioned. IT was also a good place to be in today. Talk about the mid-caps, and this was where things were very interesting. There were a lot of interesting, big, large stocks, quality stocks that were recovering. There were also some usual trader favorite momentum names that were flying around, like HDIL, 16-17% up on that stock. HCC had a good run. Jet Airways has been whipped in the last couple of sessions. Today, it was perhaps some of those shorts covering with oil prices rising. Maybe that was a trigger, 6% up on Jet Airways. Balakrishna, United Breweries hit a fresh 52-week high. These were the up stocks. On the downside, some big cuts on Reliance Communication, lots of volatility around that stock, down almost 10%, and Jain Irrigation also lost quite a bit today, Prashant.
Okay, so that's kind of the wrap-up in terms of what we saw in trade. Let's quickly get some opinion on the market to kind of sort of set things up. Directionally, how are things looking? Have the market soured a bit? Mitesh Thakkar and Mayuresh are with us, gentlemen. Thanks very much. Mitesh, to begin with you, I mean, what did you make of the session, the sell-off that we saw? It was looking promising at one point, recovering from the day's low and all that, but did not last. Your sense?
Good evening, Prashant. I think one, that the intraday indicators are not yet, suggesting any kind of continuation on the upside, rather more of a pause. The daily and the weekly indicators are still good. So my sense is that I think, with some kind of rally already behind us, I think the market is now showing signs of stagnation at higher levels. So I think a choppy range-bound market could emerge. 11,470 to about 11,350 on the upside is the narrow-term range. But in case 11,350 breaks, then we might actually find support around the strong levels of 11,200 to 240. So in that sense also, even if we break the range mildly on the downside, I don't expect a big correction, but more of profit booking. And I think, once this choppiness plays out for next, I think around 2 weeks or so, then we are likely to resume the uptrend.
Okay, fair enough. Let's move to the next headline of the day, and this came in from the currency space. The rupee continued to slide against the US dollar, hitting fresh record lows today as well. Tech and pharma stocks had a field day on the street as the back of that currency weakness. Infosys, Mindtree, KPIT Tech, all of these stocks were up and about in positive territory. Sun Pharma and Dr. Reddy's, like we told you earlier, were also positive in trade today. In fact, former RBI Governor Raghuram Rajan has said that he's not too concerned about the rupee hitting an all-time low. Hear out why.
I think the rupee has been strengthening in real terms for quite some time. The inflation rate has been modest but slightly above world inflation rates. And as a result, the rupee needs a modest weakening over time. So I'm not too concerned about the rupee hitting an all-time low. It's more a factor of dollar strength rather than necessarily rupee weakness. But I would say that broadly, you want to look at countries with large current account deficits as well as a high level of debt.
Okay, we got a question. This is Debyendu Quiti from West Bengal, who's written in with a question on Sun Pharma. Wants to know the right time to put in 2 lakh rupees to work in Sun Pharma. Essentially, is this the right time? Mayuresh, what would you tell Debyendu?
Evening, Prashant. I think the numbers were quite good that Sun Pharma has posted, and the management commentary and guidance also in line with what the street is probably expecting. So I think the sales growth in higher single digits, I think that probably augurs well. The R&D expenditure is expected to be 8 and 9%, and they possess a very, very strong pipeline. So the expectations of a very strong pipeline getting monetized over the next few quarters and the resolution coming through the Halol facility itself will ensure that the earnings momentum probably continues. In terms of an entry point and the earnings expectations, I think the entry points can be in a staggered way over the next few weeks as the correction comes through. But along with Sun, you can probably also look at Ipca Laboratories and Aurobindo Pharma within the mid-cap universe, where I think the growth momentum in terms of the domestic formulation business for Ipca and the high margin injectable business for Aurobindo should also abet their earnings growth. So I think instead of investing in a single stock, my suggestion would be to buy on declines a basket, something like a Sun, Ipca and Aurobindo.
Okay, fair enough. I mean, Mitesh, Sun looking okay?
Yeah, I think now is the time. We've been recommending a target of around 750 over here. I think the stock has already started its uptrend. So maybe, you would want to put about 60-70% right now. And in case you get about 10% kind of dip, which looks very difficult to me as of now, you might want to add more. But that should be it.
Yeah, stunning recovery in Sun Pharma in the last couple of weeks. Stock flying away after numbers this time around. Okay, let's move to the third headline of the day. Nifty Metal was the worst performing sector today. The index slipped over 2% under pressure from a strong dollar and rising trade fears. The brigade was led by Jindal Steel, JSW Steel and Hindustan Zinc. All of these stocks were down about 3% in negative territory.
Okay, we've got a question. Ankur Jain from Bangalore has written in with a question on Vedanta. He's been holding 55 shares of Vedanta. His cost is 175 rupees. I mean, he's been holding the stock for the last 2 years, he says. He's a long-term investor, wants to know if he should hold or sell. Mitesh, Vedanta, what would your advice be?
I think from long term, I don't see any significant promise on the charts of Vedanta, at least in the short to medium term. So I think my advice would be to switch to a sector which is possibly just getting into an uptrend. A few months back it was IT, now it's pharma. I think Mayuresh recommended few stocks. I talked about Sun Pharma, but I would be equally comfortable accumulating a Dr. Reddy's or Aurobindo Pharma for that matter.
Okay, Mitesh, thanks very much for that. So that is Vedanta. We will take a very quick break here. First on the show, we come back and we take more questions. But before we do that, here's some market opinion that we got during the course of the day. Gautam Duggad of Motilal Oswal, we spoke with him, and we are right back after that.
This quarter's numbers, as far as Nifty is concerned, were dragged by corporate banks and Tata Motors. So the usual set of 3-4 stocks dragging the aggregates. We have seen more downgrades than upgrades. 86 companies we have downgraded estimates by more than 3%, and only 40 companies we have raised estimates by 3%. Consumption is going to be see a big recovery. This has been a view for the last 15 months, and we are seeing increasing evidence of consumption recovery panning out both across urban as well as rural. And when I say consumption, I don't necessarily mean only FMCG. Even auto, we have seen very good volume growth. Consumer companies, FMCG, retail, we have seen decent volume growth. Of course, some of that is also led by the low base, but underlying trends are also improving.
We are in conversation with Mayuresh Joshi as well as Mitesh Thakkar to answer a lot of the questions that you have with respect to trade today. Let's now move forward with the next headline of the day. The RBI dismissed Kotak Mahindra Bank's plan to dilute its promoter's stake. The stock dipped over 3.5% as a result. Remember that earlier this month, Kotak Mahindra Bank had issued a plan to come out with preference shares, helping promoter Uday Kotak pare down the stake in the bank to 19.7% from around 30%, which would be in accordance with RBI's promoter holding norm. So now basically they have to come up with a new plan. Abhishek Kothari is here with some more details.
Well, the impact of RBI's delay meant that, the promoter now has to reduce their stake to 20% versus 30% that they hold right now by December 2018. So what are the alternatives by which they can do is through a merger and acquisition, or through issuance of fresh equity shares, or by selling their own equity shares. So this means if they do any kind of equity issuance, it can lead to 24 to 25,000 crore worth of equity issuance that can come in and can put a selling pressure on Kotak Mahindra Bank. So however, sources tell CNBC TV18 that RBI and Finance Ministry were not happy with the move being in the right spirit. They were also against this move on account of the fact that this will set a bad precedent in the coming future, or in future stands wherein promoter will be asked to pare down their stake. There were opposition from industry stalwarts also, because they believe that such move can be unfair to others who have already diluted their equity to meet the RBI norms, especially in the case of Union Bank of India, wherein they had issued preference shares, but that was converted into equity shares earlier. We had written to Kotak Mahindra Bank on Tuesday morning as regard to a clarification from them with respect to why RBI has objected to them issuing preference shares. Back to you.
Okay, Abhishek, thanks very much. So, I mean, this is not the end of the story. Kotak is confident that they'd be able to engage the RBI and, make them see logic in their argument. But look at the market and the way it reacted. It seems like the market believes the RBI may stand sort of firm on its refusal to allow the structure to go through. We've got a question. Narendra B from Hyderabad has written in with a question on Kotak Mahindra Bank. He's been holding 200 shares purchased at 700 rupees for the last 4 years. I mean, price is what, is way better. He wants to know if he should hold or sell. That's the question. Mayuresh, what would you tell him? And generally, what's your view on Kotak Mahindra Bank? Would you see any further weakness as an opportunity to buy?
I think, Prashant, what has probably transpired in terms of not meeting the dilution norms as per RBI, I think that has definitely taken a knock onto the stock. But the fundamentals still remain extremely robust. So if you're talking about the advances and deposit growth, still expected to be in in the mid-20s. What you're probably talking about, NIMs being between 4.2, 4.3%. One of the best NIMs in the industry. And again, the expectations of asset quality pressures coming off, with GNP is expected to be at 2%. And credit costs dwindling is clearly getting reflected in ROAs at 1.7, ROEs in double digits. So a large element is how valuations are stacked up to the others and how the growth patterns will pan out. So on that basis, again, I think it is expensive. But since the investor is holding at lower levels, he can hold on. For fresh investors, again, wait for declines onto this counter, let it consolidate. And an alternate can also be RBL Bank, very, very equally hopeful in terms of a very strong earnings momentum coming through with strong advances growth and the building of the liability franchise, which is going to be very, very granular, exhibited by the return ratios as well. So I think declines for Kotak Mahindra and an alternate choice, RBL Bank.
Mitesh, any thoughts? Kotak?
Yeah, I think, the longer-term chart still hasn't got damaged, but yes, in the short term, with this kind of decline which you've seen, I think the stock has started some kind of correction. So maybe it will give a pullback to the longer-term averages. I won't really be worried. I think just trail your stop loss about 1150, 1160 zones. And as long as that is not being broken, I think hold on to the stock.
All right, okay, gentlemen. Let's move to the next headline then. It's the last headline for the day, and it's a CNBC TV18 exclusive. We learned from sources that ICICI Bank, on behalf of JP Associates lenders, has approached the Reserve Bank of India to prevent the company from being sent to the NCLT. The bank has also requested the central bank to allow an out-of-court settlement plan for JP Associates. Ritu Singh, who broke that story, is with us. Ritu, fill us in on all the details and the rationale and whether this may or may not hold water, perhaps, with the Reserve Bank.
A week after Supreme Court directed the Reserve Bank of India, or allowed it rather, to direct banks to take Jayaprakash Associates to the NCLT for insolvency proceedings, we've picked up from sources that the lead bank in the consortium, that is ICICI Bank, has in fact initiated talks with RBI to provide a special dispensation for Jayaprakash Associates to prevent it from being dragged into insolvency. The reason for this is thus, they've explained to the Reserve Bank of India that a debt restructuring package has already been approved by the Joint Lender Forum last year, which is very much in place. Under the agreement, a portion of the debt, which is close to 14,000 crore rupees, will be transferred to Ultratech's books, and the remaining about 10,000 crore rupees will be transferred into an SPV that will house the land assets of the company, and the remaining about 6,000 odd crore rupees of debt will remain on the books of Jayaprakash Associates as sustainable debt, something that the banks have already agreed upon, and therefore they are trying to convince the Reserve Bank of India to stick to that recast plan and would prevent the company restarting the whole resolution process all over again under IBC. They also assure the Reserve Bank of India that JPA is taking steps to reduce its debt even further by selling off the remaining cement businesses for which it is in talks with other players. So these are the reasons that have been cited, but of course it remains to be seen whether or not RBI will listen to the bankers' plea.
Well, Ritu, they didn't listen to Kotak. Let's see if they listen to ICICI. I mean, the cases, of course, are completely different, but this would be RBI making an exception just for one company. So, I mean, you know, after news like this, you look at the Jayaprakash Associates stock, it barely budged. I mean, it went up some 2.5% and ended flat, I think, by close. ICICI Bank is the lead banker, and it's got a large amount of exposure to Jayaprakash as well. So we got a question actually on ICICI Bank. Mahesh has written in to us from Chennai, and he's basically has 65 shares of the bank. He's paid 295 rupees, so he's in the money. He's a long-term investor, wants to know if he should hold or sell. So that's the question coming in on ICICI. So let's just get both your views. Mitesh, why don't you take this first? How is this looking?
I think both ICICI and Axis, I think, you know, now is the time when they've started showing promise on the longer term charts. I'm looking at a target of 360 to begin with on the charts of ICICI Bank, but I think once that is crossed, and that's a very significant pivot level, once that is crossed, I think 425, 430 can happen over here. So I would suggest hold on. And
Mayuresh, briefly, what would you say, ICICI?
So I concur with Mitesh. I think it's a clear hold from my side as well. I think a resolution for NCLT cases, what you're probably seeing in terms of strong momentum on retail advances, a large element of their book probably getting recognized. Though I think the pain in terms of provisioning might still continue for a quarter or two. But I think the growth patterns will be very, very evident in terms of strong advances growth getting transmitted into strong earnings momentum and a subsequent rebound in their ROAs and ROEs. So a clear hold from my side as well.
Okay, so that's a whole ICICI back from our experts. And with that, we are completely out of time. Thank you very much, both of you gentlemen, for joining us on the show today. It's going to be a wrap on this edition of Markets Today, but don't go anywhere. Lots of news is coming up. And of course, we will see you with the markets tomorrow, last trading day of the week.